JB here. Hope everyone's doing outstanding on this fine September 5th, 2024. We have about 33 minutes to the open, talk really quick about the market, some of the names I'm looking at, and go from there. But take a look. The S&P tried to rally yesterday, came up to that 554.46 handle, right up to 555 before pulling back, closing pretty much almost at lows. It seemed like the markets hit highs right around 11 o'clock, dipped all the way into the late afternoon, then just a slight little bounce to close just barely in the red. Uh, I guess you could take that somewhat as a good sign considering what happened on Tuesday, but we'll see what happens here today. Was yesterday just a little chop before the next leg to the downside? Certainly going to be important. The 50-day moving average, 549.06. So that'd be a big spot. And then I hate to say there's that much more downside, but maybe 542.50 I guess would be the next spot. So that's kind of what I'll be watching today. I don't want to be a situation. I always say this, getting caught with my pants down. So I'm certainly open to adding some more put hedges, especially if there is more weakness. This morning we got some more data. So we had weekly jobless claims came in higher than expected, or mostly in line. Actually, maybe it was a little higher than expected. But then the big data point was the ADP report, which is kind of the precursor for the jobs report tomorrow. And that came in much lower than expected, under 100,000 jobs. And that was on expectation, I think, of 112,000, something to that effect. Not saying that exactly is going to pinpoint what the jobs number is going to be tomorrow, but certainly going to be one of those data points that people will be focusing on. And that's especially on the heels of what happened in August. So, uh, another, and I try to pull some silver lining out of the market down days. IWM almost up to 215, found resistance, pulled back. Want to see 555 and 215 on IWM. If we can get over those handles and hold that into tomorrow, I think that might bode well. So that's part of the overall market. Some individual things, and you start reading all the headlines, and I put it on the watch list. It's inflation was going to cause a recession. Then it's jobs report, manufacturing numbers. It's like every week there's a different narrative, and today, or at least the last couple of days, the yield curve. A couple of years ago, everybody was talking about the inverted yield curve. It's where people are getting paid higher interest on the lower the 2-year yield as opposed to the 10-year. So when those invert and you have a 2-year paying more than a 10-year, they call it the inverted yield curve, and that typically that precedes every recession in known to man. So sure enough, back in 2022, what happened? The yield's inverted, and it's been inverted ever since. Still not in a recession, right? But now they're uninverting. So eventually, it looks like the 2 year is finally going to be under the 10-year yield, which is how it should be, right? You should be paid more to hold longer duration. And now they're using that as a headline. So in Market Watch this morning, it says recession signals are flashing, sirens are flashing. But nice little data points here. So there's, I guess, 10 instances since 1980, or 1, 2, 3, excuse me, 6 instances since 1980. And the big outliers, of course, the dot-com bubble. Markets were off 11% 3 months later, 12, almost 13% a year-over-year basis. And in 2007, March, we had the uninverting of the yield curve, and green for the up to 6 months, and then year-over-year was down 7%. The rest were all green. So it's like all those other data points and all those other flashing signals. I mean, what the Hindenburg omen, we haven't had that yet. That's been year-over-year. There's always been a Hindenburg omen. And here we are, right? Still stone throws away from all-time highs. So take everything with a grain of salt. At some point, there's going to be a pullback. And at some point, people are going to go back and say, wow, this was the flashing signal that caused the reset. That was the telling that the recession was coming. But for now, it's just another little data point, put in your back pocket, and just, obviously cautious as market pullback this week. But we'll have to see how this all plays out. And the VIX. So just want to see that back under 20. So 215 on IWN, 555 on the SPY, VIX under 20. I think that all bode well. I posted a chart too in the chat room, and another I pull little silver linings. The amount of stocks over their 50-day moving average, still 70% of the S&P stocks are over their 50-day moving average. You wouldn't think it based on all the chatter and everything you've seen in the last couple of days, but still relatively strong. But we were 70% back at the start of August before the big pull, over 80% back in April when we had the big pull. So could just be, hey, this is the top. And I said this last week too. I was worried about the double top. So we don't want to see that scenario play out. All right. So individual names. So we had the gap down yesterday morning. Locks on my Lamb Research puts in for some nice profits. Of course, in hindsight, I should have locked them all in, but I want to I don't want to be in a situation where we do continue to pull and I have no exposure to make money on the downside. So held the rest of the puts into today. I'll probably hold them into tomorrow, pending any crazy massive reversal. Start looking 725 or so. I think would be the first target there. If there's more weakness today, I'll lock some more in there, and don't be surprised if I add some more inexpensive hedge puts. And I talked about it yesterday as well. The implied moves on some of these names is just it's remarkable, uh, especially considering Tuesday's move. So when you have a 2% implied move on a stock that's $800, well, now I'll talk about in a minute. It's almost, I wouldn't say it's criminal not to add some protection, but to use those as a vehicle for protection, I think offers the best risk reward. So that's Lam Research. Service now also weak off the open. My puts were up nicely, but not over 100%. So I held them. The stock bounced a little bit, still closed in the red. I added some more strikes. Again, small implied move. All it will take is another 2% down day, and the puts will pay off nicely. Back-to-back days of 2 or 3% or even higher, and there'll be nice, really nice gains. So that's kind of the thought process on adding those. I always say great names, great companies, probably higher over the next couple months and years, but offer great hedge positions if the market shows some weakness. So now some other names. Clear Secure still, I wouldn't call it the bull flag breakout, but still setting up for a move into the mid 30s. Sitting on my hands for now before I add more strikes, but solid day yesterday considering the market weakness. Knocking on the door $30. Hopefully gets over that today. HP Enterprises released their earnings after the close yesterday. It was a strong beat and raise, and I think if this was back in May and June, the stock would be $25. Also talked about a backlog, $3 billion backlog. They got $2 billion in cash from an asset sale or an equity sale on the stake. I'm just surprised it's down here at 1790. So I have the September strikes. Maybe I'll look for some more strikes here if it does what HPQ did last week, where it has reversal off a red to green open. I think it's a great story, and it has that whole AI backdrop. So, and that was the big theme that they talked about on the conference call. So really like HPE, but obviously the market doesn't. So we'll see who's wrong. But hopefully some buyers come in, and maybe I'll look for some spec calls at the open. Redfin back-to-back days of just monster. It was like deja vu all over again. The Tuesday we had that big move all the way up to near $11 before the pullback. Yesterday, similar story, spiked right out of the gate at 9.25, almost to $11 by 11 o'clock, 10:30, and then just gave back most of the gains to close. Still close up nearly 4%. Hopefully, one of these big squeezes and moves to the upside is not met with sellers, and it can start to embark on its move to $15. Still very bullish Redfin. I talk about all the ingredients for the move. We have the backdrop of lower rates, the housing market, the pent-up supply and pent-up demand. I think that's all just going to be part of the equation. And then the fact that Redfin, well, not the fact yet, but the possibility that Redfin is going to be profitable either at the end of this year or at the start of next year. And I think you put all those ingredients together, I think it just bodes well for a move further to the upside in Redfin. And one of the names, I used to trade Lending Tree back in the day, and used to be like a $300, $400 stock, and I played it for some nice calls. I think it went all the way down into the teens. And I'm not saying it's going to be a similar story to Redfin, but I think you can have a kind of a similar move where it took a while for Lending Tree to reverse course. And then once it did, it was 20, then 25, then 30. Then I think is it 50, 55, $60 now? I'm not saying Redfin gets to 55, $60, but I could see it going into the 20s or so in the coming 6 to 12 months. So don't be surprised if I add some further strikes on there. I already talked about it on the watch list the last couple weeks or so, but Turn, there's some scenarios, and I posted on FinTwit yesterday, and I think I posted in the chat room. But if you're looking for some scenarios for Turn, I think positive data, low to zero adverse effects, it's 22 to $25. In line with zero or little adverse effects, 13 to 15. And then if there's in line or worse than expected, or even in line and some adverse effects or serious adverse effects, and folks pulling out of the study, dropping out of the study, then it probably trades sub $5. So that's kind of the playbook. The premiums are coming out of the calls a little bit. And as much as I want to go and get some October strikes, I'll probably just sit on my Septembers. Doesn't make sense. The only reason to get October strikes for me is if the data doesn't come out till after September 20th expiration. So as we get closer to that date, maybe I'll start to look at October strikes. But the October 14s, 15s, those calls look a heck of a lot better than they did even just a week ago in regards to the cost. So I don't know if that's because there's been more liquidity in the names, there's been huge option action, or it's because the folks are betting on the other side. But either way, Not going to add anything just yet. Roku got an upgrade this morning. I think it was from sell to neutral. Is it Wells Fargo? Well, yeah, Wells Fargo came out and upgraded them to equal weight from underweight. I'm not sure if it's going to do the same thing the Guggenheim upgrade did 2 Fridays ago, but certainly a welcome sign here. I still have some concerns with the trade desk coming out with a possible platform for streaming. I mean, to me, Roku's already entrenched, so I think it'll be hard for another competitor to encroach on that space. But still, uh, TTD does really good with what they do, so probably not the best competitor to come in this space, but still like Roku. And then you have to start to think we have football seasons coming, sports, hockey, basketball starts. I think all this backdrop for streaming just plays right into the Roku's hands. I'm not going to add anything just yet, especially with the overall market. If there's still some weakness, Roku tends to trade in sympathy with the market more so than on its own merits. So I'll just wait on that one. And then last but not least, and I shouldn't say last but not least, is NVX, ENVX, however you pronounce it. My strikes are up nicely. It's down 7 sessions in a row. So I might look to close my puts out today and look possibly for some October strikes. At some point, it's going to have a bounce. I think now I'm like 690 is a possibility. So maybe I'll look for some October strikes pending. Just some other names I'm looking at. So the financials were weak on Tuesday. Uh, Typically, as rates go up, banks can make more money and financials make more money, right? On the difference between folks saving and how much they can charge and things like that. As rates go down, you have to think, is that net negative for some of these banks? Is that some of the reason why some of the JPM, Goldman Sachs all got destroyed on Tuesday? I mean, a lot of stocks did. So if there is market weakness, don't be surprised. Goldman Sachs, JP Morgan, even BlackRock, I may look for some inexpensive puts or maybe some Lotto spec puts. And also take a look at Visa and MasterCard. Those names have been on a roll lately. And I always talk about Visa, MasterCard. I haven't traded those in a while. But I mean, Visa, August, it was 255 after that big pull. It closed at 280, 280.49 yesterday. Solid day yesterday. It's solid day the day before, even with the market weakness. So those could be some names that might just sell off if the market also comes under pressure. So don't be surprised if we get some spec puts there. And I think that's it, folks. I'm trying to think what else to talk about here. Broadcom reports earnings after the close today. So I mean that's definitely going to be a name that folks are going to watch. I'm sure they're going to report stellar results, but you never know. They're on the heels of their split too. So I think that's it, folks. Let's have a great day. I'll be back on audio a little later. Rock and roll.